I'm Jim Cramer, and welcome to my world.
You need to get in the game.
Firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere, and I promise
Mad money. You can't afford to miss it.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain. I come out here and I'm trying to coach you and teach you about how to handle your money. So call me at 1-800-743-CNBC. Major and minor chords. They're what this market is all about. We're constantly trying to figure out which trend is the major chord that can be bought on weakness and which one is the minor chord, which should be sold into strength. You might think this was a nothing day. Dow up small, 4 points even. The S&P up a tiny 0.2%. But the averages, they are masking some big changes in the stock market symphony. So what the heck is the major chord? What are the themes you should buy into weakness? There are a bunch of notes in this one. The producers of raw materials, the fertilizers like potash, up 5 and change today. Or the industrials like Caterpillar or Eaton or United Technologies. They have the upper hand right now. They're the major chords. These companies are selling into emerging markets that are desperate for food and machinery, and their profits are huge. No wonder they all hit beautiful new highs today. The second major chord, new breakout technology, like the tech that powers the web, the mobile internet tsunami, and yes, cloud computing. Okay, so what's this minor chord in the metaphor? That's the consumer products companies, the healthcare companies, and other businesses that don't shine when economies around the world are growing rapidly. Now, do you know that almost this entire last several hundred points of run to the elusive Dow 12,000 has been led by the minor chord stocks. Yep, minor chord. During this move, there has been a rotation out of the major chord, the ag, industrial, high-flying tech names. Those have been under severe pressure, not to mention the dramatic fall in the oil stocks, another group that have been extremely hot going into the this year. But today all of it changed. Today we switched themes. Today we switched chords. The companies that have been raving, they've really been having that terrific run late. Colgate's, Proctors, along with some selected drug, tobacco, telco stocks, the ones that have powered the major averages, even though they are merely minor chords, these stocks seem at last to be handing the baton back to the major chord drivers that have gotten us so far to begin with. Now, some of this is because of the huge increase in raw costs without the growth needed to exceed them, which was a problem that was so well on display in outfits like Colgate and Proctor and Gamble, which had been very strong of late until today when they were pummeled. Some of it is because maybe the major chord should never have been under pressure in the first place. The snap judgment on some of these earnings reports from the major chord names is very muted, sometimes even downright discordant. There was Schoenberg. There was this unhappiness with the earnings release for one of the best performing industrials of last year, Parker Hannifin. Hey, not to say a muted response for Alcoa, too. A lot of people thought they simply didn't do well. That was a big reason why the major chords seemed to be sitting this rally out. And, of course, there was the simply astonishing decline of F5. That was a major mind scalder. That's a traffic director for the web. And it's at the heart of the mobile internet tsunami, along with the spurning the other day of VMware. Wow, that got clocked. Makes the key software needed for cloud computing to operate. That sexy way of downloading applications from the web that is the software equivalent of what Amazon does for hard goods. These were the themes that had gotten us so far, that it worked so long, and for a while, they seemed kaput. But now the major chords are coming back. Today we saw a fantastic number from Caterpillar, a stock that I think can go very much higher in a very short period of time. I think 25 points. Been telling people who subscribe to ActionAlertsPlus.com much higher. We had a terrific earnings beater and raiser from Eaton. Sandy Cutler, the CEO. How good is he? Hey, by the way, he threw in a fabulous dividend boost, 17%. Gave you a stock split, 2 for 1. There was that thing of beauty earnings report from fertilizer maker Potash that we like so much. It's reclaimed its leadership, reminding us that food is in short supply all over the world, like we needed reminding, given the food riots breaking out across the globe. And only fertilizer, along with more farm equipment, can make a difference, especially when the weather doesn't cooperate. Potash gave us a super dividend hike and a 3-for-1 stock split to boot. Parker Hannifin, Alcoa, they're coming back slowly but surely. The market simply misjudged the results with that faulty instant analysis. At the same time, we had two astonishing reminders of the major tech chords today. The monster quarter from Netflix, which is a total smartphone revolution play, so much so that in a stunning announcement, the company said it was going to stop using the number of households to measure the size of its addressable markets, and now goes by the number of cell phone users. You don't go up $27 like Netflix did today because you aren't hitting the numbers. You get that kind of rally unless you beat, you got it. You don't get it unless you beat the estimates and have what I call ARG, accelerated revenue growth, to back it up. Keep in mind, Netflix now makes up 20% of all internet traffic in the evenings, and they only just started streaming movies online. Nobody was thinking this business would be a big deal even a year ago. Then there's Qualcomm. While ARM Holdings, Skyworks Solutions, and Micron, stocks I've been recommending of late, are all terrific smartphone plays, Qualcomm is really the backbone of all cell phones, maybe the nervous system. It's the intellectual property that dominates 3G and 4G. And this company reported the best quarter that I have seen out of them in ages last night. Hey, one more. Let's throw in Cirrus Logic. For good measure, the redeemed sound card company with Apple contracts that reported fantastic results this morning and has made a remarkable comeback from the abyss of 11/12, one that finished an astounding $3.37 higher, or 18.8%. And I am thrilled about this. Why? Because the CEO, Jason Rhodes, is a total stand-up guy who came on the show after his stock was clobbered and told us he would do better next time when I held his feet to the fire. He did. He really delivered. Cirrus is a huge part of the mobile internet once again. When you tack on the commentary from Verizon about the incredible growth of smartphones, yesterday's conference call, you got to listen to that one. Billions of texts and data bits being sent over their network. And then you look at the pathetic, dumb phone maker Nokia's plain old sad numbers. And you know the smartphone revolution is alive and well, and televised for that matter. I think the cloud remains bright, oxymoronic, but true. I think that the mobile internet tsunami names are ready to roar again. Get this, I even think that F5, Salesforce.com, and VMware, all faltering of late, should be bought and bought aggressively now. The bottom line, time to salute the major chords and let the miners fade back. They did their job in getting us higher, but now it's back to business with the real drivers of this market, the generals of industry and technology, to take us higher and higher still from these levels, which are thought to be exalted, but are still more than 10% below where I think we're headed in 2011. Ken in California, Ken.
Yeah, hey, booyah, Jim from sunny wine country, Northern California.
Oh, man, I like it up there. My boss gave me this book, Beautiful Boy. I'm reading it, man. It's a tough story, but that is right where you are, and I love it. What's going on?
Hey, I purchased Acme Packet a week ago at $60, and in 1 week it dropped $10 on no news. However, it has recovered slightly since Obama's State of the Union address, due, I believe, in part because it's an internet-related company stock. Jim, what's your 411 and advice on Acme Packet?
Acme Packet got caught up in the F5 sell-off, the unbelievable, just incredible, just nightmarish crying that people felt about how bad things must be in the web. And particularly in this border session control, particularly in the Acme Packet business. And let me just say this, Acme Packet's doing fine, thank you. It's doing terrifically, and you should hold on to it. It was an overreaction. Let's go to Linda, my home state of New Jersey. Linda.
Yes, hi, Jim. This is Linda from Morristown. I've been watching your show for about 6 months, and I've learned so much, so thank you very much.
You're welcome. There's a new Roots opening up there, too. I can't wait. I'll be there. I'll be in Morristown any minute.
Excellent.
Yeah.
My question is about Sara Lee stock. I own several hundred shares that I bought at 15 and change, and it was up over $20 a couple of days ago because of takeover rumors, but today it's down because the latest rumor is that the company is going to be split up.
Right.
So what should I do, Jim?
Okay, I
Should
said to someone earlier this week that you got to sell Sara Lee. This is precisely the kind of company that I think is going to be hurt by the raw cost commodities that ding Procter & Gamble. I don't like management. I think that all the hoopla and the rumors aren't worth owning. This one feels like Radio Shack at 20. You had to sell. And I'm reiterating that's exactly what you should do, even though it's down $1.50 from when I told people to sell it last time. Nathan in Virginia. Nathan.
Booyah, Jim from McLean, Virginia.
Love it. Love it. What's going on?
What is the deal with the Red Hat? It's way down compared to $48 back in December. How do you think this new IT enterprise spending will affect Red Hat in the future?
I think Red Hat's doing fine. I think the problem with Red Hat was because people felt that VMware, which is a cloud play, said there was seasonality and a budget flush, that F5 delivered a report that people didn't like. And it sent down everything from Red Hat to Salesforce.com. We had the Red Hat CEO on recently. I think the story's fine. This is one of those where I would take advantage of the weakness and do a little buying. All right, let's thank the minor chords, the consumer products, the healthcare stocks, and now it's time to send them on their way. Time to go back and make room for the major chord stocks, the generals, the industrials, the fertilizers, the agricultures, and the techs of mobile tsunami and cloud fame. That's what's going to move us again next time. Mad Money will be right back.
There's more to come. Back in his no-huddle offense. You can